What's up? What's up? What's up? What's going on, everyone? Well, let's start here with Learn Plan Profit as of today. So, hope you guys are all having an amazing morning. As you guys could tell, we had a couple issues just with like logging in and stuff like that. So I do apologize for the inconvenience on that. But this is actually something that I want you guys to consider. I don't know if you guys like. When you guys look at the market and as soon as the market opens, I feel like a lot of people just try to force trades and try to get in with like the first 30 minutes or an hour and stuff like that. If we look at the overall market conditions right now, which is just a little bit later, what do you notice? So for all those that are tuning in live, what do you notice like for these tickers that we're potentially looking at, something like DGAS, something like DRIP, something like JDST? We tend to notice that later throughout the day, what happens? We usually try to catch it at the very bottom, and I want to hear what you guys have to say. So if you guys can comment in the live chat. Definitely 100%. So Ryan, I do see a lot of current like stocks and ETFs that we were watching. They are pulling back. So. But when it comes down to the overall patterns and then the recovery throughout the middle of the day or throughout later throughout the day, is that something that you guys notice? So I'm going to start sharing my screen so you guys can see exactly what it is that I'm talking about. So let's go ahead and go right over here. Let me just make sure that everything is good here. Yeah. So for all those that are in the live chat, let's see. Whoops. Okay, so we got HPE. All right, I like it. So I don't know if you guys just saw, but the call out on Macy's just broke above $31. As we can see, that has been a previous resistance, not once, not twice, not three times, but as of right now, it just hit $31. So you just have to ask yourself, do you find this to be a good deal, or do you think that this thing is a little bit more on the overbought side, right? As we could tell, we saw this consistent ascending uptrend pattern. We easily identified, where the support was, where the resistance was. We waited for the confirmation. All that played hand in hand, and that's why it's so important to understand. Again, just food for thought. So for future patterns, if you guys really like the pattern and really like how consistent this is, draw this pattern out. This is an ascending uptrend pattern with more of a long-term like support around the SMA line. So if you like this pattern and it made sense to you, and you know how to identify a good entry point, you know how to identify a good exit point, then write it down. Write it down so when a pattern like this comes out again, that you're able to take advantage of it. So let's see. All right, there we go. Also, I got an alert that ticker symbol, this is actually showing a pretty similar pattern. So just like we saw with ticker symbol M, check out ticker symbol F for Ford, right? Ford is now showing signs of a reversal. The only thing that I would look out for is the earnings report that it has coming up. Overall resistance at around $11.50, and with that understanding from around $11 to $11.50, it has about 5% margins. So isn't a huge amount, right? There's no question that it's not a huge amount, but it does have a pretty decent margin. The only thing that I would be skeptical about or very iffy about would be the overall earnings report that you see going on now. So let's go ahead and check out also DGAS. DGAS, just like I called out yesterday, although I decided to take a position. If you guys tuned into my live stream yesterday, when I did my technical analysis and when I did my breakdown, I was like, yes, DGAS is above $27. It has the potential to drop down to $26 based on previous patterns. And the reason that I say that is, do you guys remember last week when it pulled back? So we can do this 10-day analysis. Let's actually do this 20-day analysis. We could see that it pulled back all the way down to about, what is this? We saw that it pulled back to around 26.18. As of now, it actually pulled back a little bit further than that. So what is it that it did last time that we would like for it to do for it to recover? Well, we would like for it to start actually breaking resistance levels, right? Maybe waiting for the break above $27, something that is showing signs of a recovery, right? So let's go ahead and set our alerts. We can set our alerts for $27 and then ask ourselves, what is the potential for profit that DGAS has to offer? Let's say the resistance, just based on previous patterns, last time it also got rejected at around $30, a little bit below 30. So from where we're at right now, if we wait for the confirmation, and this, this could be around $27 to the overall price of around $30, the overall potential for profit that it has to make is around 11%. So ask yourself, what is your weekly goal? 3, 5, 7, 10% on a weekly basis. How amazing would it be to only have to take one position, maybe for the next 2 weeks, and be able to recover this? Honestly, it takes about 2 to 3 days for when DGAS actively starts trending up to be able to complete that entire margin. And the reason that you could see that is every time that it has one of these dips, you can calculate how long it takes for this thing to actually recover. It doesn't take a very long period of time when it aggressively starts pushing up. So with that understanding, again, set your alerts, wait for the confirmation. It's actively trending down now, and I know maybe for some of us that got in a little bit early, we're like, oh, I want to average down, I want to average down again. It's not a smart move to add more capital to something that is continuing to depreciate, especially because, yes, this is a previous pattern on when it does recover, but it 100% does not mean that it has to. So as long as we have that understanding, great. I can set another alert. If it starts to recover intraday and I want to day trade a portion of it, then I'll set my alert at around 26.50 and go from there. So let's go ahead and set those alerts that at or above, and then we can go from there. Let's see what you guys have to say. What's going on, Don? Joe, let's see. All right. There's not a lot of you guys have been commenting lately. I'm not too sure what's been going on. Let's see. I see. I think it just has to do with this being later throughout the day. So Muhammad saying DS is looking juicy. I do agree, but again, we do need to wait for that confirmation. So let's just make sure that we wait for that. What's going on, Kenny Wilson? What's up, brother? Can we look at Tesla? Yeah, let's go ahead and look at Tesla real quick. So looking at Tesla, TSLA, based on the patterns that we identified, I don't know if you remember the breakdown that we had on this one, Devin, but remember that we talked about this SMA line now acting as a resistance, showing signs of this descending pattern. That's exactly almost what's showing, right? We saw that it showed a push to about 300. In my honest opinion, I thought it was going to get rejected and come all the way back down to around 250. Ended up, getting rejected by about 300. It tried to recover and then got rejected again. And then again, now it's showing this descending pattern with the SMA line now acting as a resistance. Also, watch out for the earnings. In my honest opinion, again, the candles are actively trending down below the 180-day EMA, and it's making lower lows. The highs are also lower highs. So based on that pattern, that's not something that I find very attractive, especially with earnings coming up. I think that this thing can tank all the way back to around like 250 again, just because of that catalyst that the earnings can have on it. So yeah, I would personally choose to stay away. I think there's another call out, and it was HPE. I think it was the first one that was called out. Yeah, what's going on, Julian? So this actually isn't that bad. So SMA line is actively pointing up. Do you see how the SMA line is showing more of like almost a peak formation, a curling pattern? So with that understanding, based on previous patterns when the EMA line was pointing up, it was acting as a support. But now that it's curling more like this, it's now acting more as a resistance. So let's make sure that we take that into consideration. Is if we wanted to continue to start actively trending up, we needed to show the same pattern of the EMA line still pointing up. Right now, it's still showing more signs of a curling pattern. So we'd like this thing to break above this SMA line, pull back, and hold above it. Honestly, if we could hold above $18 and continue the uptrend pattern from there, that would be very attractive. But as of now, it's still getting rejected by this SMA line, and because of that, I don't find it to be that great. So let's actually take a look at your plan. 1760. 1760 would be way too early. I would honestly say at around $18, I can revisit this one and see if this is something that I potentially want to invest in, because I see the EMA line and the SMA line continuing to point up. But based on the pattern that's been shown within the past 2 weeks, I see that the SMA line is now starting to act more as a resistance. And because of that, I think that it's going to start to depreciate. So I'll set my alert just for the heck of it. But yeah. Did you catch the double bottom on drip? No, I did not. I'm really sorry about that. So something that he's talking about, so this is for Don. I don't know if you guys were able to see this, but the pullback that it had today at around 825, consolidated at around 825 for quite a bit, and it just did a double top, and it's showing signs of an ascending uptrend pattern to around 860. And if you guys do the math with the margin from like, let's say 830 to 860, that's almost 4%, 3.68% on a day trade. Again, a lot of you guys have a goal of around 3% on a weekly basis, and that's 100% great. But when you see opportunity like this present itself, then this is something that you can take into consideration, or that you can use as an example on how you can still leverage the day trade capabilities and be able to capitalize on that margin as well. Yeah, we were actually, me and Justin were talking about DRN just like a couple minutes ago. DRN again showing very low pattern, very low volume. Some pattern, a pattern that I'm kind of seeing with DRN right now is that support that it's trying to hold at around $16. Do you guys see that? So around $16. Again, it's not exact, and it has to do, I think, with that, with the. My goodness, it won't click. There we go. That was annoying. But overall, this SMA line acting as a resistance, right, as we could see here and as we could see here, and this overall support line at around $16. So it's now starting to show signs of a potential reversal, and the margin from $16 to about $17 offers about 6.14% potential for profit. You know, something to take into consideration if you like this pattern, if you find it to be consistent, and if it's something that you see value in, then it might be something to look into. MACD indicator starting to curve back in. The RSI is going to be starting to point back up as well. So definitely makes sense on why this thing can recover to about $17 and then potentially get rejected from there based on the previous descending pattern. So again, this is just more of an aggressive and riskier trade, just because you're trading something that's descending. So easiest way to put it. This is actually a really good sign for JDST. So right now we see JNUG actively pushing up intraday, but do you see how it's getting rejected by this 180-day EMA? So that's exactly what we want to see. And as long as it continues to get rejected, so we're going to have to follow with the following candle. As long as it continues to get rejected, we want this EMA line to continue to point down, and then the inverse, which is JDST, we'll see that this one, bouncing and trying to hold above this SMA line will continue to rally up. But again, if we get the confirmation that this thing continues to pull back, then we can move our attention on over to JNUG. As of right now, don't build any emotion or attachment to any of these inverse ETFs, especially right now. Just focus on the pattern, focus on whichever one has a confirmation of the uptrend, and that's what I'm going to focus on. And then I'm just going to trade that. I'm going to focus on not if I want JDST just because it's very low for that to reverse. None of that right now, especially with how aggressive like Gush and JDST have been actively trending up. I want to make sure that we don't trade against the overall pattern just because we know that JDST or that DRIP is very oversold. That doesn't really mean anything right now because, again, the patterns have been so consistent and so aggressively actively trending up that we don't want to trade against them. Cameron Skinner, so he's asking the question of Ricky, do you think it's better to take two positions and split up your money or put it in one? This morning I took two. What really comes down to like when you find it's like asking it's like putting it into perspective of like, if the opportunity cost in a specific stock is like, the margin of profit is so great, the pattern is so consistent, and it's super attractive, then obviously I would feel pretty comfortable going in with my entire account. But if maybe you don't feel so comfortable about it and you kind of want to diversify, then obviously that deal isn't the best, and maybe that's why you want to diversify. So again, just take that into consideration. So there's no exact answer because it's always going to change, but as long as you have the understanding that when you find a good deal that you feel comfortable going in with the entire account, then it makes sense. Let's see. I'm really sorry about that. Thank you for letting me know. All right, sweet. Thank you, thank you. NAP. Let's check it out. So NAP, this is showing a cup and handle pattern based on just what I could see here after this huge fall. I could also see it probably has pretty low volume. Yeah, and it's actually showing a pretty aggressive descending pattern now. So it has quite a bit of room for a pullback, I think, with this EMA line, and then for this thing to continue the rally. If you like the cup and handle pattern and you've never traded anything like it, then it might be something to look into. But just based on what I see, yeah, it's a pretty strong descending pattern. So just understand that. Yes, it's done it before where it dips back and then it does recover, as it's done it multiple times since, I don't know, we could just see that it's done it multiple times throughout the past 3 years. I would watch out for its earnings, especially because this company has not been doing very well. So I would try to get in closer to the EMA line, and then if you think that the opportunity cost is worth it, might be something looked into. But just because it's so close to earnings, I don't think that the margin is going to be worth it or be able to cover quick enough. So let's see. Kenny. Oh, what's going on? How you doing, Amy? All right, so let's go ahead and I'm just going to start breaking down the stocks that you guys are calling out. I'm going to do very quick breakdowns. So a sending uptrend pattern, validating the SMA line pretty nicely, so we can see right here. It has gone below, but again, it's just waiting for the break above the EMA and stuff like that. Are you getting a good deal right now as it's actively trending up? No, this would have to be more with like momentum and the rally that it has going on. I would keep a very close eye just because it's approaching an area where it's a little bit more on the overbought side. So if you're in it or you still think that the margin is worth it, great. Based on where it's at right now and the margin that it has left to offer, I mean, it's still attractive. It's around 5 to 7%. It's just becoming a little bit more on the overbought side. So just take that into consideration and just make sure that you'll understand if there's a break of pattern or a pullback and the difference from a pullback and a break of pattern. So we talked about we talked about JP, we talked about JNUG already, and I'm going to need it to get that confirmation and the EMA line to start pointing up for this thing to continue the rally, or if it ends up getting rejected, then we'll move our attention on over to JDST. Let's see, BYD. What the heck? Okay, so based on previous patterns for BYD, we've seen that it's validated the SMA line as a support, consolidated, it broke below it, and again, we've talked about this one before, showing more of a peak formation. Do you see this, how it's kind of building this like curling pattern, almost like a hill, and it would make sense on why this would get rejected and then continue to trend down. So again, it's not just because it would make sense, but let's wait for the confirmation. Let's set the alerts. If it breaks above 36, then we could revisit this one because it will most likely be actively trending up, and if not, then we can set our alerts if it starts to actively trend down, and we can kind of go from there. So so SQ, yeah, SQ's been having to sell off the past couple of days. So yeah, definitely did have a sell off. SQ looks like it's approaching a pretty low price point with this like ascending uptrend pattern. So if we see any sign of a reversal, this actually might be something decent to look into. So right now we're right around, I'm going to set my alert at 48.50. I want to see if we can get a slight recovery. Also, watch out for the earnings that it has coming up throughout the late this week. MRTX. So MRTX, it's actively trending up, very consistent ascending uptrend pattern, very close to the SMA line. Again, let's make sure just because it's bounced and held above the SMA line before doesn't mean that it has to again. So understand that based on previous patterns, the resistance was right around 32.50. Right now, it's still actively trending down. I would like to wait for a break above 30, and then to around 32.50 offers about 8.9, almost 9% potential for profit. So I think once we wait for the break above $30, then we'll have a much better understanding that it's actively trending up. And yes, it's at $28 right now. So if you get in right now, then you're just taking on the risk of getting in before the confirmation, and then for this thing to continue the downward rally. So whatever it is that you feel more comfortable doing. This one actually isn't that bad. I'm going to make sure that I have this one in my watch list. We're going to take a look at, so again, you did no breakdown on Zillow, but just I've done this breakdown before, so I just wanted to talk about it in front of the group. So please make sure that next time you call something out, that you do the proper breakdown. I have my alert set here at around $51. I want to catch it when it starts to reverse back up, not when it continues to descend. So good call out. I just needed to reverse. VRX. I know how I feel about this one. Very inconsistent. Okay, so this pattern makes a little bit more sense to me. So we could change the time frames and kind of go based off of that. So let me go on the 180-day chart. We could see that I'm going to try to get a better understanding of these different margins. Do you guys see what I see here, right? The margin, the support and resistance that it's had here. It pushed up based on previous supports. Now the next resistance can be around $19 to $20. So watch out for the also potential resistance at around 18. So right now where we're trading at, it's around $19, offers about 9.38% potential for profit. And if we look at that 10-day chart, I think with this 10-day chart, we could easily be able to determine based on this consistent pattern when it's a good time to buy, closer to the SMA line, and when it's a good time to sell, closer to it being on the overbought side, right? Very easy to determine when it kind of like peaks out and stuff like that. So let's make sure that we take that into consideration on for entries and exits. So as of now, I do see this thing to continue to have the potential to rally, and it looks like it's trying to actively trend up. And intraday, yeah, it's still trading in between the middle VWAP and the bottom VWAP, which is not a good sign. I would like this thing to break above the middle VWAP and then continue the rally from there. So this is also a pharmaceutical company. I personally don't like these. So all right, so let's see. Okay, so I would personally completely stay away from this. So this is HEAR. The reason why is you can see that there's no volume here. It went through a reverse stock split, and then there's like this straight manipulation that happened. We can see that the volume is not as high as it was before, and I would like to follow up with HEAR if you guys can remind me in 2 weeks. I can almost reassure you that this thing will be back down to about $3 to maybe $2 even at that. I don't like these pump and dumps. I don't like stocks that are easily manipulated, and I don't find them to be consistent patterns. I would encourage you guys to potentially stay away from them, but if you guys can trade them and you guys feel comfortable with them, then all power to you. So Mohammed skipped over my question. Where's your question, bud? Let's see. Oh, no, that's a comment. Let's see. I don't see your question, Mohammed. I'm sorry. Let's see. So, Jeremy, it just has to do like kind of like preference for me. So it's not that it works better. So he's asking like, why does the 180-day 4-hour chart work better than like the 1-year chart? It's not that. It's like when you go on the 1-year chart, I feel like that's still too long of a period of time. You're taking too much data into consideration. So and there's nothing wrong with that, but it could just be also very overwhelming. And I feel like the 180-day 4-hour chart gives you more of a relevant pattern, even if at that, like it could also be a little outdated as well. That's why sometimes I do like a 20-day, like 1-hour breakdown or a 10-day, 30-minute breakdown. So I'd like to look at the 180-day 4-hour chart just to get a general understanding of the overall pattern that these stocks or ETFs are showing. But then once it comes down to like wanting to look a little bit closer, I can definitely like check this out and I'll have a much better understanding of like kind of how it's trading and stuff like that. So I can't say that it works better than the 1-year charts. All I could say is that it works better for me, and that's why I talk about it. Are you watching MU? Let's see. So whoa. Okay, pretty showing a peak formation. We were talking about this one when it was actively trending down, but it's still getting rejected. So I'll set my alerts just for the sake of it at around when it goes up and above 50. But as of now, I don't find that overall pattern to be very attractive. So that's a pretty good question. Well, Joey, what do you think? Based on my experience holding DGAS and UGAS over Thursday, you just have to take into consideration that there's huge like you're taking a 50-50 like shot at potentially losing a quick amount of money. If you're okay with holding, then you have to understand the overall pattern of if you're getting in low, if you're getting in high, and how that can act as a as an overall just like indicator for like if you should hold this one or just cut losses right away. But yeah, just based on my experience on holding something like Diaz and then having that huge sell-off, and then luckily it was able to recover right away. It's just, I personally don't think that it's worth it. I can easily see or just wait after the report, and whatever thing sells off very aggressively. If I see that it was actively trending up, but it's just that sell-off that acted as a catalyst for that sell-off, then I can wait for the reversal and get in, and I can still capitalize on that margin of profit. So what's going on, Dustin? Let's see. I did go over DRIP already. So DRIP is still actively trending down. We're waiting for this thing. So DRIP intraday offered pretty decent margins. So on the 1 day, 1 minute chart, it's actively trending up in between the middle VWAP and top VWAP right now. It's a little bit more on the overbought side. But one thing again, for a swing trade, I would like this thing to hold above $9 before I even consider really swing trading it for more than a couple of days. As of now, because of the strong descending pattern that it's been showing in almost every time frame, I needed to start breaking above $9, easiest way to put it. So if you see value in it, great. I would treat it more as a day trade and kind of go based off of that. So same thing is kind of happening right now with DGAS. DGAS is showing signs of a descending pattern, and it's trying to push up. I've set my alert for around 2650 because that's where the middle VWAP is at, and to see if we can capitalize a quick little day trade from around the middle VWAP to top VWAP. And even within that, the margin isn't really necessarily worth it. So I might even just wait for a full-on swing trade, and when it breaks above $27. Again, I don't want to waste my time day trading for small margins when I can just swing trade, and the opportunity cost is much more worth it in that perspective. So good question though. All right, let's see. Did you go over TEL? So I did go over TEL yesterday. So if I'm not mistaken, TELL is actively pulling back today, and I actually saw this in the morning. So it is pulling back today, right? And 1 day can't really decide the overall pattern of this. I would keep a very good eye out for TEL and see how it opens up tomorrow, and see if it continues to push up or if it actually starts to actively trend below this EMA line. So right now we're at a critical point of where we might want to either cover profits or cut losses, but I think that this might be a good one to follow up with, especially if it begins to recover again. So I'm going to set my alert just to remind me to go after it or follow it tomorrow. ELY. Yep, so ELY, pretty consistent pattern, had a pretty solid sell-off. Now it's trying to actively trend up. I would watch out for the earnings. Not something that I would feel comfortable holding over, especially since I know nothing about that company. Thank you. And then is this Rach? I don't know if I'm pronouncing your name right. If you want to write it out on how I should pronounce it, let me know. Let's see, what's going on, Amy? Yep, Apple has been down. That's actually one that we're supposed to follow up with, was it not? So, oh, actually, I thought I set my alert. Let's set our alerts right now. Apple, if it potentially starts to recover, this could be something that, do you guys see the margin that I see? So we could put that overall resistance, a very conservative resistance, although it has peaked out at a higher price point before. Even the margin from what is this, 165 to 175 offers a 5.75% margin. Again, but we want to wait for this thing to break above and start actively trending up, just like it did last time. So, and watch out for the earnings as well. But very consistent horizontal pattern that we've been able to identify here. Okay, and then we talked about M being more on the overbought side. Again, $31 being a previous resistance once and twice again. So take that into consideration on why M might be a good sell right now. DGAS is trying to recover intraday, but not much going on there. Call out on Ford for all those that tuned in late. This is the first thing that we talked about. Watch out for the earnings, but it's trying to show signs of an uptrend pattern with the overall resistance at around 1150. ESV, if I'm not mistaken, is still actively trending up. $6. Next resistance should be around 750. This might be one to potentially keep an eye out for. Watch out for the earnings, something that I'm waiting out for. So we could set our alerts if it goes above 650. This one is one that I'll follow up with after the earnings just to see if it ends up getting rejected, pulling back, or if we're going to continue that uptrend rally. JNUG, we talked about it very quickly. Showing signs of a potential reversal. I would like this thing to continue to get rejected. Again, follow up with this one, see if it gets rejected or if it starts to actively trend up, and we can make a decision on what inverse ETF or gold-based ETF to follow based on that. So OAS still showing signs of a pretty consistent uptrend pattern. Again, it's still holding above the EMA line, so it's very easy to determine when there's a break of pattern and stuff like that. So, and we talked about that. DGAS, we talked about that. We talked about DRIP. ENPH, slight pullback there. I think that this thing is definitely more on the overbought side in my honest opinion. Gush is still actively trending up. TEL with that slight pullback. We'll follow up with this one, that one later on. And then JDST. So JDST, again, being the inverse of JNUG. We already talked about that. And WTW, this is Weight Watchers. Slight pullback going on now based on that resistance that it has right around $69 to $70. So that makes sense. Also watch out for the earnings. Again, it's going to be like, I'm also going to be like holding back on a couple swing trades just because we're getting so close to earnings. And, you know, there's going to be a lot of potential and a lot of margin for recovery after earnings. So just take that into consideration. If you see a lot of stocks going in red, you have to take into consideration that people are understanding that earnings season is coming, or, you know, these earning reports are coming, and they're probably going to want to start selling off the shares. So if that, you know, demand isn't there, right, and there's a huge increase in supply, then obviously you're going to see the overall price action start to descend. So that is pretty much it for today, guys, though. Let's see. We're actually, I actually wanted to give you guys a quick little update. So, Ricky, do you also do any long-term holding? No, so not when it comes down to stocks. So my long-term investments would be like my properties, right, for real estate. So I've talked about that before. I don't go long more than like 2 weeks, just because just take this into consideration. Thinking about overall market conditions and how they are currently trading in the stock market, in my honest opinion, things are very overextended. Things are very overvalued. Just like in real estate, in perspective in that, just the real estate isn't as volatile. So because of that, if there happens to be like a huge market pullback, I want to make sure that I don't have hundreds of thousands of dollars invested in something and then experience exponential loss because of that. So I choose to invest in real estate. Again, I still focus on the principles of getting good deals. So just so I can take on that risk or that potential toll of a pullback when it comes down to that. So DB is saying just started the LPP course and loving it. What's going on, Matthew? Let's see. I would keep a very close eye because right now CL is pulling back and so is Gush. So keep a good eye out for that. If it bounces on the EMA line and then you see it continue to trend up, then yes, it makes sense. But if not, then I would kind of stay away. A scan process. Yeah, that would actually be a pretty good. I mean, I have a video showing you like how to run a scan and stuff like that. So DGAS just broke above 2650. So check that out if you still need more assistance, stuff like that. Also, guys, we have the group alert section. So again, a huge area for, you know, huge resource that a lot of you guys can use is if you go to the group alerts, there's all these stocks that everyone has done their own research on. It doesn't mean that you have to trade them. It just means that whenever you have time or having trouble coming across certain stocks that you see value in, then if you have 15-20 minutes, start breaking down these stocks. And you can give these people feedback. You could always direct message them, be like, hey, I love your call out. You know, again, it's a networking environment. So don't just think that you have to do everything yourself. There's people, again, there's our team members that are doing their own due diligence and breaking down stocks. And you can always direct message them. Be like, hey, Don, I speak to Don all the time. If I'm like, oh, I want to direct message Don, you can right click, or how is it that you do it? Or you can send him a message. Be like, hey, I really like your call out on AAOI. Do you mind if you give me a little bit more feedback on why you saw so much value in it? Can you elaborate a little bit more on that? Very simple. Again, this is where you can actually start to communicate with other traders. Don't think that, like, you know, I'm sure if you reach out to Don, he's going to, like, I mean, I don't know Don personally, right? But just because we're in this like networking like environment, I'm sure if someone reaches out to you and asks you, hey, why is it that you saw value in this? You're going to explain to them, and while you're telling them why you see value in it, you'll be learning yourself as well. So I think that's something that a lot of you guys should take into consideration on when you're having trouble coming across certain stocks. Start breaking them down in the group alerts and then start messaging one another. There's nothing wrong with that. Start building relationships and start seeing who has strong technical kind of like habits, right? When it comes down to doing their technical analysis, whose style do you like within the group as well, so you can, you know, work with them as well, work closely with them as well. So let's see. So John, Don is saying, of course, I like that. So John is asking, is it just me or is it easier to analyze swing trades than day trades? The reason that you might be saying that, and it has to just do, I mean, you have more data to go based off of for swing trades. So therefore, it's going to be a lot easier for you to do a technical analysis, just because patterns can be a little bit more consistent in that perspective. So it definitely does make sense, but again, trade whatever you are most comfortable with. Again, I know day trading does offer a lot of opportunity, but just understand that that's a much more aggressive approach. So with that understanding, you know, if you find swing trading to be much more efficient and effective for you right now, great. Work on that, and then once you get to a certain point where you've mastered and you've really perfected your techniques in that, then you can make a slow transition over to day trading and try to test those waters and see if that's a potential branch that you could expand to as well while you're still swing trading. Oh, you were going to give an update but got distracted. Something good? Yeah, so what I was going to say is that a lot of people, because I'm actually adding a new video today to the Learn, Plan, Profit lesson library, and it talks about, it's going to show you guys like a live trade, and it talked about like what's the difference from a pullback intraday and an overall confirmation of like when I should cover profits and stuff like that. I actually don't know if that made a lot of sense. So I wanted you guys to see me actually exit a position, and I'm going to do one of me entering a position and what indicators I look for. I think I have a couple of them you know, on YouTube already, but for you guys to have something to always go back to and me explain exactly why I'm covering profits where I am when there's a break of pattern in my eyes. So that's the video that I'm going to be uploading today, as well as I continue to add more videos, something that me and Justin are going to be working on. Again, Justin is the individual, the partner that I have for Learn, Plan, Profit, that he's one of the admins. You could always direct message him. He's actually the one that I would encourage you to direct message if you ever have any questions about the course or any of that stuff. If it has to do about technical analysis and stuff like that, then that's going to be me. But any questions about the course or any issues, please direct message Justin. Now, we're going to be creating a table of content, so anytime that you guys want to refer back to a specific video, then you'll know where that video stands, just making it a lot easier for you guys to kind of navigate through the course. Since I think a lot of people don't know that when you click in a section, it's not just that one video, but you scroll down and then it has more videos. So I want to make sure that you guys know that. So I think I made a tutorial video in the lesson library anyways. So drip over 870, just notify that drip. Oh, wow. Don, congrats on that trade. And again, I'm not showing my screen. I'm well aware of that. I like it. But yeah, looking at it intraday, definitely drip is being a little bit more on the overbought side. It's actively trending up. And I also think it has to do with /CL also pulling back. Look at /CL and look how it's pulling back intraday. You know, and looking at it out the 180-day chart, you could also see that it's definitely on the overextended side. So, you know, I would watch out for this thing to get rejected. I'll just show my screen. Watch out for this thing to get rejected and start actively trading below this EMA line. And then once this thing starts pulling back, then that's when we'll see that drip starts to recover. So just something to take into consideration. So that is pretty much it for today's live chat. I really do apologize for this one being a little bit more delayed, or obviously delayed. I want to ask you guys, like, what did you guys think about today's live chat that was later throughout the day? I know not everyone was able to tune in, but do you think it's a little bit different? Like, we always do one at market open, and that's pretty great because, you know, there's a lot of activity. But because everything is moving a lot slower as of right now, it also offers a lot of potential for good entries because a lot of stuff have, you know, just sold off. So just something to take into consideration. So I hope you guys were able to make the best of this live stream. If so, you know, great. Yeah, so Christian, these videos, and again, it's all explained in the course. Like, I really need you guys to complete the entire course because this is all explained. So if you go to the Discord chat, you can go to the morning chat library, and this is where you'll see all the videos and live streams on the specific dates that we've gone live. So yeah, just something to take into consideration. And yeah. But that is pretty much it. So I hope you guys have an amazing rest of your Tuesday. I like both. I like that. Nice. I like the perspective later as well. Okay, sweet. You like this? Let's see. What are you in right now? I told you yesterday before I went on to my took off on my flight that I took a small position on or a 40% position on DYAS. So I definitely got in a little bit too early, but it's something that I'm still comfortable holding. The percentage that I'm down is not very aggressive, and there's no break of pattern. I got in a little bit too early, but I know that once it starts to recover, then I can actively start adding more to my position. So, yep. That's really cool. Thank you again, Tyler. I like that. Sweet. Yeah, so all I can encourage you guys to do is if you guys are just getting started, you know, we have a good amount of people within the Learn, Plan, Profit overall community. And just because there's so many questions, if you guys saw in the live chat, there's so many questions that are being asked. There's a lot of these things, a lot of these concepts that are already covered in the course. So please make it your top priority before you start. If you're asking a question and you need to ask the question, 100% I'm all here for you. But let's make sure to take into consideration that all the people that have already completed the course, that we want to make sure that we answer their questions, because their questions are going to be a little bit more relevant. If you're asking a question about like, hey, how to set up you know, the TOS like scanner or something like that, that is something that we show in the course. So you asking that question, me dedicating time to do it in this live stream, is not considerate to others, as they've already completed and taken the time out of their day to actually complete that part of the course. So just food for thought on why, you know, you might want to. So TELL just broke below 958. So but yeah, that is really just it. So I hope you guys all have an amazing rest of your Tuesday. Thank you guys again for tuning in, and I hope you guys have an amazing rest of your day. Take it easy, team.